Thanks for joining us on BloombergQuint. I have with me Abidali Neemuchwala, CEO at Wipro. Thank you, sir, for your time.
Thank you for having me on the show.
Although your revenue for Q1 is on the higher end of the guidance range, why is that the Q2 is literally lackluster? What are the challenges you foresee?
So, guidance that we give for the next quarter is based on what we see at the time that we give the guidance. And we incorporate some of the uncertainties or risks that we see. We do see a significant risk because we have leadership in the healthcare segment, especially on the OBAMACARE space. And there is a high level of uncertainty right now. Over the last 3 quarters or so, we've almost seen on a run rate basis about $120 million equivalent of revenue decline because of cancelled projects. And we do foresee that if the uncertainty continues, we may have a little more impact. So that is why we've baked that into the margin guidance. Consumer businesses in general are seeing headwinds because of the environment, especially with the brick and mortar consumers, which primarily are our customers. So we have incorporated that as well. And the communications business, for us, we have completed a couple of large transformational engagements and new deals have not kicked in yet. So there's a little bit of a lull in that part of our business. So all of that has been baked into our guidance. Otherwise, I feel very good about rest of our verticals and overall, especially client mining. Guidance is more of incorporating what you see at a point in time and then giving it out to the market.
And what is it going to drive the EBIT margin in the IT services business? And what are the challenges you foresee?
So the margin drivers primarily are all the traditional levers plus the hyper automation, as we call it, which is cognitive and artificial intelligence based automation. And the headwinds in margin are that we are doing more localization, we are doing more acquisitions, which in the early part are margin dilutive. We are making a lot of investments in IP, which have a depreciation effect on our margin for the investments that we make. All of these. So I think we have enough levers to offset the investments and the margin headwinds. And I feel comfortable that we'll be able to maintain the margin in a narrow band.
And do you expect it to be in the range of 16 to 18%, or you're striving to be slightly higher?
Yeah, as we have said, that we'll be almost in the same range as we were last financial year.
Right. And once when you joined, you mentioned about your ambitious target of 15 billion by 2020. What are the challenges you foresee going in for that, given the current market sentiment?
I think that's an ambition, it's not a target.
Right.
So I feel very comfortable that the entire organization is energized towards the ambition. The strategy that we have laid out to meet that ambition has been getting very good resonance from our customers, and we are executing very well. Our employees are very energized. So I feel quite good about our ambition. Now, whether we will take a year or two more to achieve the 15 billion number or we do it faster is something that it's probably too early to say, and there is a level of uncertainty in the environment with the transformation going on. But overall, I feel quite good about what we are doing as part of our transformation journey.
Right. And do you see with wage hike, rupee appreciations, visa costs, would you be able to hold on to the margins?
Yeah, I think there are, as I said, there are enough levers to be able to deliver margins. Utilization is a lever, automation is a lever, pyramid is a lever. So we continue to have a lot of levers. And of course, pricing also is a lever.
Right, and you mentioned about the buyback plans. Can you give us a timeline for that also?
Again, there is a procedure which is slightly different compared to last year because we have to go with a postal ballot to our shareholders, which will take the buyback completion by October, November.
Right, and healthcare sector, there has been sort of no regulatory clarity on that. So how is the client spending on that, and also on the retail sector?
So specifically in one part of the healthcare business, we do a lot of stuff with a lot of clients, and in general that business looks very good. But the part on Obamacare that we have, the HPS business, I think there the client spending is completely stalled, and unless there is clarity, I don't see the client spending resuming.
And how's the client spending changing across clients in Europe and US? Is it smaller and numerous in number, or it's the other way around?
Yeah, so we are seeing more of digital deals. They are by nature small. We are also seeing some renewal deals which are larger, but there is more commoditization and pricing pressure on those deals. So the industry is fundamentally changing from a market perspective.
Right, and lastly, what are the verticals you're going to see a stark improvement as we move to the next quarter?
We are gaining market share in BFSI. I feel comfortable on BFSI. We have leadership position in energy and utilities, and we are doing well over there. We've come back to growth. I continue to have a lot of traction in the manufacturing and technology vertical, although again we're facing some headwinds there in a couple of accounts where there has been some project cancellations or changes, project completions. But overall, we feel the manufacturing and technology vertical is healthy.
Right. Thank you so much for speaking to BloombergQuint.
Thank you, Nishant.